First-time home buyers have been core to prosperity since the day it was founded. As a matter of fact, we've helped over 100,000 people into their first homes. Beyond that, we've focused in the last 5 years about where to make investments in first-time home buyers and home ownership. We've spent invested over $35 million in the last 5 years trying to figure out what works, what's the best thing. And one thing that we definitely noticed is that there isn't a national magic bullet. There isn't an opportunity to take a step back and say, we're going to launch this national program, it's going to make a difference, and the homeownership gap is immediately going to collapse, okay? Instead, what we found is exactly what you all know. It's hand-to-hand combat. It is individual, face-to-face meetings, it's spending time, it's understanding. So we started what's called a credit needs analysis in a local MSA to say, what are the biggest roadblocks to narrowing the homeownership gap? What are the 2 biggest things, 3 biggest things, 4 biggest things? We went in with a very open mind to try to figure this out. So we employed a couple professional companies to go out, survey, to look at every piece of data that they could, okay? And we were hoping something very interesting and novel was going to come back out of this study. As a matter of fact, you know what the 2 biggest things were? Education and down payment. Did you guys already know that? All right, you could have saved us some money. But regardless, that is what is so important. And so the question is, understanding what it is you do and what we do, where does this lead us over the next 5 years? When we know this is a personal business, taking people from where they are to where they want to be. And what's happening in the independent mortgage bank landscape that's either going to move us closer to those goals or further away. So we're going to start down a little bit of a journey. The one thing I want to talk about is kind of defining what an independent mortgage bank is. I think it's one of those terms that we throw around and we're like, oh, sure. But what is it? So, independent mortgage bank is different from a traditional bank. All right? Traditional banks, they take deposits. So the community deposits money in those banks. Those banks then take that money and lend it out into the community. We hope it's to the same people that are depositing money in the banks, which is why the Community Reinvestment Act started. Right? That started because banks were taking deposits from communities and lending them out to different communities. Okay, so that's a bank. An independent mortgage bank specializes in one thing and one thing only: mortgage lending and mortgage servicing. I guess that's 2 things, but basically the same thing. And we borrow that money to lend out to people at large. Okay, so when we talk about independent mortgage bank, that's what we're talking about. So to name a few, Rocket would be an example. Prosperity would be an example. Loan Depot would be an example, whereas a bank would be more like Wells Fargo. So let's talk about kind of what's happening in the mortgage space, the independent mortgage space. These are all headlines that have happened over the last month. I didn't expect you guys to read all those. I'll summarize them for you, right? There's one theme that's occurred over the last 2 months. It's consolidation and scale. Companies buying other companies, people becoming as large as possible to try to do what? To try to leverage information and technology. The weird backdrop that we have here is it's consolidation and scale with reduced oversight. Okay? So we have a regulatory regime where the CFPB has, I would say, retreated somewhat from oversight. And for independent mortgage banks, our primary overseer would be the CFPB. Whereas you heard earlier today, banks have to deal with the OCC and sometimes the SEC and other folks. Independent mortgage banks primarily have the CFPB. I'm going to be up here on stage as an independent mortgage banker and say, I'm upset that the CFPB has gone away. And I'm upset because it gave us a consistent set of rules by which we could all play. What we have now are all these different states that all have slightly different opinions on how things should work. That makes it very, very difficult for us to navigate those rules, right? Now, with all of this consolidation, with all of this massive scale, which means becoming as big as you possibly can, we see a split in independent mortgage banks, okay? There's independent mortgage banks like Prosperity that really, really focus on being local, on providing solutions for the communities where we live, we work, we worship, we play, right? And then There's the independent mortgage banks that are looking more like massive tech companies, right? And their focus is on how quickly, how inexpensively they can actually process a loan and get people through. They're kind of lacking that face-to-face, eye-to-eye type solutions that we really lean on when we're thinking about how to optimize home ownership. So, I'm doing the wrong button. That's what happened. All right, there we go. So, when we talk about where things are moving, right? This is going to be a little bit, I am not a tech guy by any stretch, but we have to focus on that because that's what's the most important. Because all of this consolidation, what is it for? It's to have data and information on everyone sitting in this room. So we talk about what we've seen. Let's just say, and like I used to work at Rocket, so I have nothing but respect for them. I love Mr. Cooper as a servicer. I think they do a fantastic job by the consumer, right? Those two combining, along with another company called Guild with a very large servicer called Lakeview, Bayview. You put these two companies together, along with a company called Newrez, and they service 16 million customers that have a mortgage out of 85 or 83 million nationwide that have a mortgage. 1 out of 5 people is basically monitored constantly by one of 3 companies. That is where the consolidation play comes in, right? So what are they looking to do with these 16 million people? They're looking to figure out what you're going to do next. You know why? Because they want to sell you things. Okay? So this is where the spread comes, again, between these more tech-looking companies and the more traditional independent mortgage banks, right? So if I'm in their shoes and I have you as a servicing customer, what am I going to do? Well, first and foremost, I'm going to find every piece of publicly available information about you, and I'm going to append that to your profile. And then I'm going to start monitoring what you're doing every single day, what you're spending money on. Also, they can find your location, so where are you going? Have you gone to Home Depot 6 times in the last month? That probably means you're looking to sell, or maybe you need a home equity line, okay? These are the things that are starting to happen with these large combinations of these companies, okay? It's called propensity modeling. They look at your location. Again, they're trying to sell you the next thing. Okay, that's great. That's all for people who already have houses, okay? They're looking to interact. Their focus is on people who are already homeowners, okay? Does that make sense to everybody? Okay, the next thing that's really a focus when we talk about high tech is, again, if we look at the quotations, interacting and processing is how they are going to interact with customers, whether they're leads, meaning, hey, they came in off of the internet, right? Or they're actually prospecting people. What does this mean? Well, again, when we talk about the personal hand-to-hand combat, right, versus the more tech-focused, AI agents, okay? What does that mean? It's a buzzword, et cetera. Here's what I would say is something to really keep an eye on as we think about how this world works with our world where we're trying to put people into houses, okay? AI agents basically answer a phone call. So you call into a number, you have no idea you're talking to an AI agent, and they navigate the entire conversation for you, okay? That sounds crazy, right? Who believes it works? Anybody? I'll tell you what, it does. It's crazy. So we were testing one, and a company kind of brought it to us. We started training it a little bit. So I thought, hey, what a great idea. I'm going to give my 7-year-old daughter the phone and see what happens, okay? And it actually did a great job navigating the entire conversation. 2 things stuck out to me, the most. Number one, my daughter, she kind of knows what I do. We don't talk about it in our house, really. I think she thinks I'm a realtor, So it's not really a thing that's pervasive. And she was talking to this AI agent. And again, this is going to go to the importance of our role in educating potential homeowners, okay? She's 7 years old. She's talking to this AI agent who was very kind. And she said, well, how much are you looking to put down for your down payment? Well, first they said, what's the price of the house you're looking for? And she said, $300. And I don't know what that was. I don't know if it was dollars or cents or 1,000, but they said, okay, 300. So that's the level of intelligence we're dealing with here. And then I said, how much are you looking to put down? Guess what she said? $1. I wish she would have said $1. She said 20%. I am not kidding. And I looked at my wife and I said, what have you been teaching her? You know what I mean? Like 20%. Like this is my goal in life, is to break this myth. And my 7-year-old daughter drops 20%, right? And so now I'm concerned. I'm like, she's got a side hustle. She's doing something. She knows more than I think she does, right? And I'm worried. And then the next question is, they said, hey, we'd like to match you with a mortgage or a loan officer. Do you have any requests? And she said, I'd like him to be cute. Kids say the darndest things, right? And I was like, all right, that's great. So these are real. They're coming. They're going to be smart, right? And they're going to interact. The question is, hey, they did a great job dealing with the 7-year-old and listening to her questions, right? Because they were simple. When people really need to be navigated through the tough interactions of how do I get from where I am to where I'm going, and also how do they get that personal interaction of, hey, I don't even know if this is it. Should I even be thinking about home ownership? You know, one of the things that we found is the tremendous amount of people who were mortgage ready, who were home ownership ready, who continued to rent because that is what had happened generation after generation after generation in their life. How do we break that through? Is it through AI? Maybe, but I don't see it today, right? So that's how we lean into it. So again, this split between the tech company, you know, independent mortgage bank, and there'll be banks like that too, versus what we're more seeing as the kind of hand-to-hand combat people, right? The second thing I'll say is, as we move more towards technology in the loan origination process, like very cool thing about VantageScore, if you were looking at that. Hey, credit bolstered by, hey, utility payments, rental payments, things like that. The problem we have in mortgage lending is that credit is only one half of the equation, right? The other half of the equation is, you know, ability to repay. Can you afford it? And a lot of those same rental streams, so it's rental income, it's utility payments, historically have not been able to be counted, right? We're moving into a great time where technology is enabling us really to look at the whole profile of the potential borrower, okay? Here is the problem when we talk about, you know, real facts in a room like this. It only works if you're banked, right? So I have to connect to your bank. I have to be able to see where you're making payments, where you're depositing it. It's not like, hey, I show up with a letter written by my landlord that says, hey, they pay on time. That doesn't work, right? Because this needs to communicate directly with the automated underwriting systems to say, yes, this works, okay? So again, as we continue to move to this new age, are there some positives? Absolutely. But we have to keep our eyes open about who are we going to leave behind, right? And I think that's where tech misses it, right? These are people with great intentions. They want to expand the home ownership gap, right? Or they want to narrow the gap, expand home ownership in general. But again, how many people are going to be left behind by these solutions? And I just think, thank you all for stepping in and filling that gap and continuing to do it and partnering with us. Yay. So, you know, that is the schism that we're seeing. And I can't speak, it's tough for me to speak for other independent mortgage banks. Okay, I just don't know. We are owned by a real estate company, Home Services of America, Berkshire Hathaway, if you've seen BHHS, or we own about 40 other brands. So for us, when clients come in to get, to buy a house, if it's your second house, your third house, your fourth house, you probably already are fairly adept at the financing game. You're probably established and have a bank or know someone who's going to be there. So you're less likely to need us from a financing perspective. So that is why we skew so high first-time home buyer, right? Because it's when you're your first time, you say, hey, you know what? I need someone reliable to partner with. And our agents a lot of times say, hey, just let Prosperity walk you through it. I wish we got the loan more often than we did, but hey, we definitely educate a lot of people for free. So that's good. But I can only speak really to where Prosperity is headed. So while I don't intend to make this an entire Prosperity commercial, here's what I will say, all right? Too often, we've embarked on, you know, whether it be talks at a conference like this, different working groups that we've been in, nothing concrete ever seems to come out of it. I'm just gonna be honest, okay? Sure, we have some great hallway conversations, we're all aligned, we all wanna do something, but very rarely do we walk away and go, that's what I'm gonna do. This is how I can address it. This is going to make a difference to me, in my community, and my clients that I have right now. So what we're trying to do is put something together around that. Again, independent mortgage banks are a little bit different because we don't have those CRA requirements, right? So unfortunately, I can't stand up here like Flagstar or Wells Fargo and say, hey, I have a cajillion dollars for everybody, let's go, right? What I can say is how can I creatively, but it also makes me really responsible because I try, again, the investment we've made over the last 5 years has been about focusing on what works, right? Because if I'm going to spend $1, I want it to have an impact. I don't want to spend $1 to say I spent $1. That does nothing for anybody, right? So I want to talk about that. And again, we really feel like leaning into the human touch is important, but it goes far beyond that, right? Here's what it's about. It's about building that generational wealth, right? And understanding that this is a journey, right? So it's not just education. It's not just down payment assistance. As a matter of fact, one of the wildest things that I've learned, diving deep into a few communities is like the initial step in some people's home ownership journey is not renting. It's coming inside, right? That was mind-boggling to me. It's like, oh my gosh, the journey can start there and then go to a shelter and then progress to rental and then progress to home ownership, right? But the journey doesn't stop there. We'll talk a little bit about this in a minute. But, one of the things that we also learned partnering with Habitat for Humanities across the country is that repair and maintenance is just as important as helping people in the house, right? Because I know we all want to get people into houses, but we also want them to have a successful homeownership experience, which is why Prosperity steps back. And again, owned by a realtor, we're just very, very, very invested in successful homeownership because we also believe it helps the community, right? It not only helps the family, it helps the community. So that's what we're going to talk about as well. So I'm going to get to kind of what Prosperity is doing, how you can partner with us on this. And again, we don't have to be the end lender on all of these, right? We just have these programs up because we believe in it. So that's what I want to talk about. As I said, we talk about one of our drum beats is high tech plus high touch. I'm just going to be honest. You can't compete and exist in the world of mortgage banking without being high tech, right? We have to have that option for people. And I think my next slide, no, maybe this, we'll go this one. This is really about meeting the customer where they want to be met, okay? Because here's the thing. A lot of people that you guys deal with as well and are helping, they're also tech savvy and they're banked, right? So we want to help those people and give them an awesome experience, just like the people who really, really, really need to be handheld a bit and helped out. There's a lot of our friends in the Hispanic community, for example, where we have to drive to the place where they're employed, right, to actually verify their employment and things like that, right? Every community is a little bit different in terms of what they need. So what we say in Prosperity is we like to give a variety of experiences, all right? And I don't mean this by price point, I mean it by more customer service, right? We've got Dollar General, we've got Macy's, we've got Nordstrom's, okay? Dollar General, you don't want anybody talking to you maybe, you want to walk through, find your own stuff, you might not even want a cashier, you want to walk right out, all right? If you want that, we got that for you, all right? Macy's is kind of like, hey, you go in there, you think you know what you want, you put on this jacket. I probably should have gone to Macy's because they would have told me not to buy it, right? But, that's neither here nor there, right? But maybe you want that second opinion, right? You want something real quick to say, yep, that looks good. And then Nordstrom, or a fancier store, I don't know a fancier store, but I'm sure there are, they're like, hey, we're going to tailor make it for you and make it happen. Some people need that experience. Some people come in thinking they're Dollar General and they end up at Nordstrom. Some people come in Macy's, end up at Nordstrom or Dollar General. We're okay with that. But we need to be fluid with that and again, meet the customer where they are, okay? So in our opinion, that's how you merge the two together. As Ricky said, Prosperity has about 540 mortgage consultants throughout the country. So although we lend in 49 states and the District of Columbia, we try to be local everywhere we are. Okay, so we understand the community and we understand the nuances that are there. Okay, so we want to talk about how we can partner with you all, right, with your client base and really guide them through this journey and give them tools at each spot. Okay, we'll have more information after this because this is going to be a lot. I'm going to throw at you in the next 3 or 4 minutes, and it's going to be some stuff that you've never seen before, I hope, and it's really, really neat. And again, we're focused on everything from education and mortgage readiness, right, to affordability, and then successful home ownership. So those are the 3 things that you'll see us hit on, and some things that we're providing cost-free, okay, to folks who you refer to us and bring into us in our ecosystem. Again, they don't have to do the loan with us for all these things, okay? But just bringing them into us and letting us experience prosperity and at least give us a shot at the deal. We want to provide this for your customers, all right? The first is called Foyer Savings. And this is the landing page for Prosperity Home Mortgage. It's a partnership with Foyer. Weird name, these tech companies, lowercase as well. We love them, but they'll do what they do. This is a really, really cool mission-driven company, though. And here's the focus. A, get folks savings and get folks banked. Okay? That's not the biggest push, though. This is also an app on your phone, and it has a ton of home buyer education and homeowner education tools. And you can earn rewards for going through different lessons and different applications, etc. But beyond that, here's what it really does. Save for your down payment, earn rewards for your progress, learn about home buying. Okay, great. What does that mean? Someone deposits money into this account. Okay? So Prosperity sponsors them, I'll just say, for 2 years. Okay, so it's usually $99 a year to participate in this. Prosperity is going to cover 2 years of this. Okay? Beyond that, though, they deposit money. We immediately match 6% of that deposit and hold it in a piggy bank for them for down payment or closing cost assistance. Okay? They don't have to use Prosperity to get that money either. All right? I just want that to be clear to everybody. All right? So that happens. Also, all the money that's in there, it also earns a 4.15% APY as well. So they're earning interest, right? Like, I can't tell you how many people we see where their whole down payment, is sitting in checking, which is fine. But for my bankers here, you guys are making a lot of money on that checking, right? Because they don't pay anything on checking, right? So we have that. All right, so look, here's a good example. $5,000. They earn, over the course of a year, right, they're going to earn $207 of interest, and they're going to have $300 to go towards down payment or closing costs. Okay? Is that awesome or what? Yeah? All right. So listen, we have education there. We have savings there. Okay? So we're going to skip that part. All right. Credit Evolve, Credit Climb. Who loves credit repair companies here? No? 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 All right. Well, hey, we got a good one for you here. I promise. So, this is really focused on getting people mortgage ready. Okay? So whether it be credit invisible, whether it be credit repair, and they wanted me to point out that this is not Lexington law, which got snatched by the CFPB. It was there now, right? And also, I think part of the problem here is these are very expensive in a lot of cases, right? So we don't know if the value is there. Well, I just want to tell you, we're going to introduce you all to this company. Prosperity also reduces that cost dramatically as we sponsor people. But for each and every one of you, the first 5 people that you bring in here, we're going to give it to them for free for a year, Matt? For a year. So also there is. And then longer term, if this is something that interests you as kind of some federal money shifts around, right? You can also partner with Credit Evolve for a low monthly fee, but you guys can also share in that revenue stream should you want to, should you find value in the service, and should you think it's a value add to your customers. Okay? Next, Cinch Home Warranty. All right. We work so hard to get people in houses, and then the HVAC goes out. What do? Right? The vast majority of people that are first-time home buyers that get into a house are one life event away from catastrophe. That's just the bottom line. Affordability is too difficult, right? So Cinch Home Warranty, Prosperity, anybody that you guys bring, Prosperity will pay for the first year of this warranty. And here's the key. It's a $50 deductible for anything that happens. $50 deductible. Okay? HVAC goes $50. Fridge goes $50. You name it. If it's covered under home warranty, $50. Okay? We like this? Yeah, because that's what we're trying to do, right? We're trying to build home ownership. We do not want people that work so hard to do this to have everything thrown away by one thing, right? And again, having these houses in livable standards is so important. The amount of houses that are just wet is amazing to me, where, they just close off the third story of their house because it's wet. This is the kind of stuff we have to prevent, right? And we have to work together because it doesn't stop when we just put people in. Okay, one other thing that's happened a lot, natural disasters, right? Those are a bit on the uptick, right? So for natural disasters, Prosperity is also providing a year of recoup disaster insurance. What the heck is this? Does anyone understand what AFLAC is? I still get confused a lot of times, but it's like if you break your leg, they'll give you $2,000 while you're off work, okay? Recoup is the same thing, which means if a natural disaster rips through your neighborhood and it's declared an emergency, they will immediately give you $5,000 to go pay for your hotel, to pay for new clothes, to pay to get your kids back and forth to school, to pay for a rental car, whatever you want. Because we're not going to let a natural disaster kick people out of their dream of home ownership either, because they're going to get behind the 8 ball. If that happens, they have to move out. They can't afford the hotels. They don't have relatives that are there. All of these things are impediments, and we want to remove. Okay? So, okay, this is new to me. This is exciting. We got all kinds of stuff, everybody. All right, let's go. To Ricky's point, that's called our Path to Prosperity product suite, right? So we are going, I'm getting the 1 minute. All right, I'm landing the plane, I promised you, all right? She showed me the 1 minute twice, but I won't tell her. She's really nice. She didn't want me to feel bad. Again, it's just an entire suite of products. So let me just give the prosperity uplift, okay? And this is what we want to offer each and every one of you. Please, we have a QR code after this. We have a table out there. We just want you guys to engage with us and get information. If it's the right fit for your clients, fantastic. If it's not, let us know how else we can help, right? Because we're not mind readers around here. We try. So here are the things really quickly. Become mortgage ready. What are we going to do, right? Foyer. The Foyer, again, is the app that's the banking app, the down payment app, but it also provides a bunch of education tools to help augment what you all do so well every single day. Credit Evolve, again, not a naughty credit repair company, a good one, right? That we've partnered with for many years, have a lot of track record with, right? And they are going to help get us mortgage ready, make the invisible visible into that, right? And then we have our outreach offices throughout the country as well, where you guys can host events or do anything you want, have meetings if you need some space, okay? Now, the second part, affordable home ownership. Again, the Foyer deposit match, the rewards for down payment and closing costs. And then here's something I didn't mention, which is our Uplift program, which is what we call this whole thing. One of the problems is it's the people who need the best rates get the worst rates. Do we know this? It's kind of a weird thing, right? Hey, affordability is terrible, so let's charge everybody an extra %. Listen, I'm a capital markets person. I understand the why. But here's the thing. It doesn't have to be that way if we just make a decision not to make it that way. Okay? So anybody that you guys bring to us through 2026, we're going to eliminate all the loan price adjustments on those loans. Okay? So that's the Uplift program. And then the thing that's overlooked the most, right? Successful and sustainable home ownership. I don't say that we have the answers here. All we can do is try to put something together to help, right? So Cinch, again, the low deductible home warranty to help people in that first year of home ownership while they get their bearings and they find all these unexpected costs. And then Recoup, which is, again, that defense against a huge natural disaster ripping through, gives them $5,000 of cash to try to bridge the gap between then and then when they're going to actually get their stuff. So with that, thank you again for having us. We really appreciate it. Have a great conference, everyone.